GM, and welcome back to the channel. Jerome Powell has just testified in front of the House committee here, fielding a lot of different questions. We're going to go through the kind of main crux of what's been spoken about here. Yesterday, the markets reacted very negatively to some of the rhetoric around higher and longer for interest rate raises. And so we're going to pick up things here to see exactly what's been going on today. Has there been any change in the rhetoric? And what can we look forward to for the remainder of March? If you enjoy the content, make sure you subscribe to the channel. Let's listen in as we hear the chairman here question Powell around the March meeting that's coming up in 2 weeks' time, and what can we look forward to during that meeting.
Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which of course I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received and of the overall direction of the economy and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
So essentially what he's saying is the data that's coming out before the March meeting is going to play a large role in the outcome of that. If we just look at the CME Fed Watch here, the chance of a 50 basis point rate hike is now at 70 to 71% here. So the market is pricing in 50 bips. 25, which was by a country mile the most favored result just around 3 weeks ago. This is now down to a 29.5% chance. So 50 bips being priced in by the market here, with Jerome confirming, inflation has ticked up a notch. He goes on to mention the upward revision of figures around November and December. And this has obviously caused some concern for the Fed, but they're looking forward to these key dates here. So there was some data released today, which he references within the video. He talks about the key JOLTS job openings here as being one of the key pieces of information to look at in terms of the next meeting's outcome. That came out today a little bit hot. The expected was 10.5 million job openings. There was actually 10.8 million, and typically this means a strong currency, i.e. the DXY would increase. That is exactly what we saw. Dixie actually spiked up here, somewhere around the high 105s. A little bit of a rejection here from this kind of region. If we just look at this from a TA perspective, that was the 6th of Jan, that was the 6th of December. And if I was charting this like an altcoin, you would say potentially if this does fail here, this looks like a swing failure pattern, which would be bearish. But with the data coming out as it has been doing, especially strong labor statistics, this will play into the hands of a strong US dollar. But then looking forward, we have on the 10th unemployment data. There was a massive surprise to the upside around the non-farm payrolls during last month. Hopefully that will come in a lot cooler this time round. And then we're down to the 14th of March here for the CPI data coming out, which he's saying, look, these are the key points that are really going to be the deciding factor on whether we get 25 bips or 50 bips going into the following week, which is Wednesday, the 22nd of March here. So within this, Jerome Powell gets absolutely peppered with questions, individuals representing different areas of the US, putting forward some of their concerns. Very interesting to actually listen to this because some people are representing areas that are more impoverished, with individuals with lower incomes and also representing minority groups. And these are the kind of people who are going to be most impacted by higher interest rates. Higher interest rates disproportionately affect the lower income workers. And of course, if they're going to be job losses, typically those at the bottom end of the spectrum are the ones that lose out. So he did receive quite a bit of backlash within this, which was quite interesting to actually listen along with, a bit of a blood sport, but shows he does have a job that I don't think many people would like. Checking in with Bitcoin here, the chart does not look particularly good at this moment in time. We're seeming to get this pattern of consolidation and then elevator down, consolidation, elevator down, consolidation, potentially another elevator down, which will see us take out this kind of range here. 21.5, 21.6 is where I would be looking, especially with DXY going up. This obviously negatively correlates with Bitcoin, but if we just check in on the SPX as well, after this bullish end to last week, it's erasing a lot of these gains fairly quickly as well. So a few other thoughts from the industry. Nick from the Wall Street Journal here. Powell makes a notable change to his opening statement in his delivery. He says, if, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. So this kind of phrasing obviously leads the market to be a little bit stressed by this, as to slow things down from 50 bips down to 25 bips, but then to reverse course back up to 50 bips does actually seem like they haven't really got things in control and they have to take more drastic measures. So March for sure looks like one heck of a choppy month. A bit of comedic relief here from Mr. Brad Sherman. This is the old classic that he dished up back last year.
The number one threat to cryptocurrency is crypto. Bitcoin could be displaced by Ether, which could be displaced by Dodge, which could be displaced by Hamster Coin. And then there's Cobra Coin. And what could Mongoose Coin do to crypto coin?
What could Mongoose Coin do to crypto coin? That is a very good question. He had his moment in the sun. He stated that cryptocurrencies are just hidden money, all by name and by nature. And he essentially got his point across with his 5-minute speech that he wants crypto gone and done with. Another member of the House also on the talk of CBDCs, which was a topic of discussion within this that Jerome actually comments on quite a bit. He says that CBDCs would not be enacted at least for a few more years. They're in a kind of research phase. But someone said, when CBDCs come out, will this mean that all cryptocurrencies go to zero? Essentially saying, because if we build our own thing on the blockchain, people will no longer need to use Bitcoin, ETH, etc. or stablecoins because the US CBDC will be the number one. This just goes to show you how stupid some of these people are, and they have no idea about the impacts of what a CBDC means for society. Once we have CBDCs in the West, we're going to see Bitcoin and other crypto assets go through the roof as people are shown the light that if you want private money, it can no longer be issued by a central bank. In terms of inflation, Dan Tapiero posted this showing US bank deposit rates going through the floor, suggesting people don't have any money left, as you can see by the chart just by here. And he's in a similar camp as Jerome Powell and others who think that inflation will actually have a major nosedive here in 2023. But if the latest figures are to go by, obviously that has not kicked into action as of yet. In terms of the CPI data for next week, that is the 14th. The year-over-year estimates are now down from 6.4 last month to around 5.4, says the Cleveland Fed. And then others down here as well. Trueflation states 4.8%. So if we do get a 6.4 read down to somewhere in the low fives, I think we could have a very nice rally for risk here as we're starting to see that inflation is actually starting to come down. And this is exactly what makes these markets so juicy right now. The fact that no one knows what's going on. We don't know what figures are going to come out. And when you have a lot of people betting on both sides of outcomes, this is where you get all the maximum volatility and biggest potential gains if you start to trade and place your bets on this kind of stuff. So for sure, there is definitely key data coming out over these next 2 weeks, and the decisions that the Fed starts to make here are going to impact risk markets in a rather large way. As I say, Bitcoin looking rather unhealthy. At this point, I would not be surprised if we continue the slide. But next week's CPI data will put either a nail in the coffin or we're going to see a relief bounce around that time. I hope you enjoyed this one. If you did, smash a like on today's video, comment down below, and I'll see you in the next one. Peace.